Hello there, viewers. You're welcome to the platform again. This is still Traders Lounge. Previously, we have been looking at the basic requirements of a trader. That is, before you engage yourself in foreign exchange trading, it means you should have known some basic terms before you forge ahead. So today we want to look at order types. The types of orders we make while trading the foreign exchange markets. Now, when we say order, the term order means how you intend to enter the market or how you intend to exit the trade. So here we want to look at different types of the order that we normally use while trading the foreign exchange market on different platforms, MT4, MT5 software or applications on Android phones. So without wasting our time, if you are a new viewer on this channel, kindly subscribe to the channel and turn on the notification bell so that you'll be notified of a new video that is dropped on this channel. And do not forget to share the link to the channel, comment and like if the video really helps you. And I'll be glad to make more videos only to the benefit of all of us here. So I want to continue the other types that we have when it comes to foreign exchange market trading. Here we have basic order types. The first one is a instant order. Instant order, or you call it market order, depending on the way you know it. This is a kind of a market order or kind of order to buy or sell at the current market price. When you look at it, you don't just open your software, your application, or go to a platform on the internet, and because you see the market moving up or moving down, you just head and no. The reason or the only way you can make instant order or market order is when you open your software or your application or on the internet, you believe that your criteria for buying or selling is met at that point. Because we have, or let me say as a good trader, you should have done your analysis beforehand. You do your analysis, know where you want to enter, know where you want to put your stop loss, and know where you want to exit the trade, that is taking your profits or targets. So when you now open your software, your application on the phone, and you see that the market is already at the area or the market movement has met the criteria that you want to buy or sell, then you can make the instant order. I hope this is clear. So you can just open it and just place the order straight away. No. So that is what is meant by instant order. So an example of that is, let's say we have the pair Euro USD. That is one of the instruments that you open on the platform, and the price is as 1.2540. When you see this and you see that it has met your criteria to buy or to sell, then you what? You click the buy or the sell instantly. Then you now look for a way of setting your stop loss and your TP. That is that about instant order or market order. And the second one is limit orders. This one has different types or subtypes. Under it, we have buy limits, we have sell limits, buy stop limits, sell stop limits. So when we say limit order, actually, it means an order that is placed to buy or sell at a certain price. That is unlike the first one, the instant order that when you open and you see, then you click buy. This one you will have done your calculation, your analysis to see precisely the uh, the action of the price at a certain area where you intend to enter the trade. That is when you use the limit orders. And the order essentially contains two variables, that is the price and the duration of the what? The time that is going to take to reach your targets or your TP. So that is what is meant by limit order. Now I want to be taking it one by one from the first one. That is a buy limit. As you can see the illustration on the screen, where I have a kind of a image there, we have buy limits, and here is the buy limit. As you can see, buy limit here. Excuse me. Buy limit there means the order that is placed below the current market price, and the market is what? The price is a rising up. Now let me give you a very good example. Let's assume you open the pair euro USD now, and the market is what? Going down. The market movement that time is going down. When it is going down, you now look at the charts and you have made your analysis that okay, as this price is going down, when it gets to a certain level, key level or trend, when it gets there, it's going to what? It's going to come back up. I hope you understand this. The market is heading downward, but you know that it's going to change the direction. It's not actually going downward. Maybe it is making correction, or is trying to retest a particular zone or key level or trend. That is what it's doing. So you know that when it comes below as it is going down, it will get to a certain level where it's going to reverse back upward. That is when you place buy limits. So when you place the buy limits below where the market movement is heading, when the market gets there, it will pick the order that is placed by you and it will turn back uptrend. That is that. But most importantly, don't always forget that when you place these limit orders, always put your stop loss and your TP. If you're a person that has time, that time, you have time and you know you can monitor it, that is when you go for instant order. When you place your order, you monitor it, take your TP and whatever. But when you are using limit orders, that kind, maybe I should say it is called set and forget. When you put everything in place, you can close your laptop, uh, shut your phone, and leave it there. You know that by the time everything is set, a moment later, you just open the application, and when it goes your way, the TP or your profit is already taken. So that is when you use the limit orders, or you're a kind of person that don't have time as such. Maybe you work in the offices and you go for lunch at noon, or you have a time that is you are a bit less busy. So you quickly look at the chart and do some analysis and say, okay, let me place this. And you put everything in place. You place your order, put the set loss, put the TP. When you do that and you what? You close it. That is when you use limit orders. Now, the second one is sell limit. That is actually opposite to the first one. And you can see sell limit here. Sell limit means order that is placed above the current market price or movements. All right. When you look at it, sell limit simply in practical means the market is going up. The movement of the market is going up. But you see that that is a form of retest or correction. When it gets to a certain resistance level up there, it's going to turn back and come back to downtrend. That is this. As you can see, this line that is drawing, the black line simply means there is a what? Resistance there. When the market gets there, it turns back. As this is going up here, and it turns back downward. That is what is meant by sell limit. And we have the buy stop, the second part of a buy limit, which is here. Buy stop means the market is already uptrend. The movement is going up. As it is going up, you now see that no, you shouldn't enter now because of your calculation. Maybe there's barricade up there, and you see that if you put your order, you place your order now, when the price gets to a certain barricade resistance, it may turn back. So you want your the market to break that particular resistance up there, and you set your what? Buy stop above the resistance level. That if this barricade should be broken, then it will pick your order and it will continue the normal trend that is what? Already on. That is buy stop. So which means in this case, when you place your order above the resistance level, you are going to put your stop loss below the order that you placed, like 10 pips depending on the time frame that you intend to use. And it will pick your buy stop order, and continue the same trend. I hope this is clear. And the opposite of it is the sell stop. And sell stop is also the opposite of buy stop. This means, as you can see from this line, black line here, let's assume that the black line drawn here is the order that you placed. And when you place this order, it means the market already is heading downward, right? It looks bearish. As the market movement is heading downward, you now see that it may meet a kind of a barricade support level there, and it may turn back upward. But you want this market movement to break that barricade there, and you set your sell stop below that particular support level, that if it breaks it, it's going to pick your placed order, and it will continue the same trend that it has been making. That is what is meant by sell stop. So, and in that case, when you place your order below the barricade, it means your SL, which is set loss, is going to be above it, some pips above it, and your TP actually to the previous swing low. So that is what is meant by the limit orders, those that we have on this page right now. And the next thing is the remaining part of the orders. It continues, as you can see there. We have a stop loss order. I've already explained that actually, but I will say briefly again. A stop loss order is a limit order that is linked to an open trade for the purpose of preventing additional losses if price goes against you. When you place it, you now look at it that in case if it doesn't go in my favor, if it turns back, and that will prevent your account, your capital, from running at loss. Even if it's at loss, it's going to be minimal. And always try to calculate the amount of money that you wish to lose, and also look for a risk to reward ratio that is a bit longer, so that you make money more than the way you lose money. So that is top order actually. And the next one is a GTC, good till cancelled. This GTC is a kind of active market movement until you decide to cancel the order. So you place this order. We have some people holding market, the order being placed overnight. If I place it maybe around 12 o'clock today, and according to my analysis, I see that it's still going to go far. So I may leave it, and when I check it around 5 p.m. or 7 p.m., it's still running and not meeting my TP yet. So I may decide to leave it overnight. That is what is meant by good till cancelled. I leave it until I cancel it. I don't put TP. When I put TP, when it gets to TP, it will what? Close the order itself. And the next one is a GFD, good for the day. And this GFD is a kind of order that is placed until the end of the trading day. Because foreign exchange is a 24-hour market, and this usually means that when it opens around 5 p.m. EST, and that is a market time of US, and it is good that you leave it until the end. So that's the meaning of GFD. When you place a market until the end of that day before you close it, that is placing it right from we have different time zone for the markets, and right from some from 7 p.m. today, let me say precisely, until 3 p.m. the next day. Another one, the New York time, from 8 o'clock till 5 p.m. So we have different time for the market, for the trading. That is a GFD. So you place it very early in the morning until the end of that day. And the last one, OCO, order cancels order. This one is used, maybe, let me say, a kind of a order that is placed. And I usually use this kind of a pattern for news trading. If I want to trade news, I place one app that in case this goes or fires uptrend, it's going to pick it there. Then I place another one down that if the market decides to go downward, maybe that time actually it is in a ranging form or pattern, just ranging, because market is, a kind of news is coming out. So it will continue ranging. Then you see a kind of breakout forcefully to uptrend or downtrend, depending on the reports. So when I place this, if the market movement fires up, then the one that is below is going to quit. And if it fires down, the one that is up is going to close. That is order cancels order. So both of them cannot remain the same. Imagine, the only thing that can make the two of them be active is if the markets first come up, pick the one that I set up, now turns back downward, and pick the second one that I have down. Then the first one up there, if the market decides to go downtrend, it means the one that it picked up there is going to be at loss. That's the only, so two of them cannot be on at the same time. It will pick one and the second one will be cancelled. That is the OCO. So that's the type orders, order types that I have to explain to you as part of what you should know as a beginner. So once again, thank you for being there. I am here because you are there. And let's build this community together. Kindly subscribe to the channel, share the link, like and comment if the video is okay by you. Thank you and stay safe.